So, good morning, everybody, and welcome to Solihull Chambers of Commerce webinar today. And it's in conjunction with Prime Accountants. Today, you'll be hearing from Morgan Davies, who is the Director at Prime Accountants. So before I hand over to Morgan, just a welcome from myself, Samantha Frampton. I work for Solihull Chamber of Commerce. I'm one of the membership executives. We're looking after the members of the chamber with to help support and grow. Apologies, hay fever sufferer here. So Morgan will do his presentation, planning for a financial future following, during and after COVID. After that, then we'll open up the chat room for any Q&As we'll pose to Morgan. Just to let you know, we will be recording the webinar, and then following that, the webinar will be uploaded and go live on the Chamber's website. And then just at the end of the webinar, then just a quick update on some upcoming ones that the rest of Greater Birmingham are hosting that might be of interest to you. So now I'd like to hand over to Morgan to take the floor. Thanks, Morgan.
Thanks, Samantha. Hello, everybody. As introduced, I'm a director at Prime Accountants Group. I look after mainly owner-managed and SME businesses, helping our clients. Obviously, through this pandemic has been my focus for the last couple of months, as well as obviously our own business, having to protect our team and the business so we can service those clients going forward. It's been amazing times, and not in a good way, obviously. So I've been asked to talk about the business and economic impact of coronavirus, what support's available for businesses out there, and how do you actually plan ahead for the new normal, if we can actually envisage what a new normal will be like. So that's my agenda today. I could go on for hours about this, so I've got half an hour, so I'll probably have to rush through some of the things, but hopefully you'll get the gist of everything I'm going on about. Businesses have actually closed overnight because of this. We all know that cafes, gyms, restaurants, theatres, etc. have had to close. There's nothing, probably since the World War, that's had such an impact on the economy and our lives, and it happened so quickly. I remember I had an operation just before lockdown on my knee, and literally from the space of going to hospital, coming out of hospital, 5 days it took for the world to change significantly. We thought it would just carry on and just protect ourselves by washing our hands, etc., and making sure staff stayed off sick. But no, lockdown hit, and that hit businesses hard. And what became very clear early on was that nobody had factored this into their disaster recovery plan. I know at Prime, we are quite sophisticated in these things, and we have backup mechanisms in case one of the buildings goes up in fire, or the servers get corrupted, or there's a virus, or if one of our key or multiple key people get off sick or worse. But no way did we ever factor for all three offices to close because of a pandemic. So very quickly we had to order over, I think, about 25, 26 laptops just so we could work from home. Fortunately, we did that before lockdown, so we could go into lockdown quickly and work quickly. And we'd embraced the cloud 10 years before. And if this had happened, 10 years previously, most of the economy could not have worked from home. It wouldn't have been possible. So some things have gone in our favour after, obviously, the terrible events. But that shock of closing down was seismic. Nobody's experienced anything like it before. April, the economy shrunk, I think, faster than probably ever. I've seen some forecasts saying that GDP would drop 15% in just that quarter to June. And if you think about it, April would have been hit the worst of that, with improving positions in May and June as people start to progressively go back to work. So massive impact. And just to put it into some sort of timeline, this is taken from HM Treasury forecast, which is an average of independent forecasts. It's not the government's position, it's all the major banks, economists' viewpoints. 2019, we had growth of 1.1%, which, if we cast our minds back to that, was slow but steady, and at quite a high level anyway, so not the end of the world. And of course, we had Brexit to worry about in 2019 and an election. Do you remember Brexit? Well, it's not done yet. We're still going to finish that in 2020 currently, unless it gets pushed back. But that caused us economic uncertainty last year. But inflation was low, unemployment was low. But look at 2020, the forecasts for this year, minus 8.6%. So that's obviously factoring some sort of bounce back compared to the numbers I had on the previous slides. But unemployment rates are, really high, and we saw that in April. I think it was 800,000 registered unemployed increase, despite all of the things I'll delve into in a minute, such as the furlough scheme to protect jobs. So a terrible position for 2020 economically. And then people are expecting in 2021 things to improve. But you can see there the growth is less than the decline this year, which means it's going to take beyond 2021 to get back to where we were at the end of 2019. It's going to be tough times. I was once told a joke that economists have predicted 7 of the last 4 recessions because they're always so negative. But this one's a slam dunk. We know we're heading into it, and we've got to be prepared for it. So we need the support that's available, and I'll go through that as part of these slides. Then obviously what to do to plan our way out of it. And absolutely, these are the points I've already made. But Brexit, in theory, the final trade deal should happen this year. I don't know if they do much in the way of negotiations at the moment. I've seen that they've restarted them, but that timeline has been shrunk by at least 3 months if you think about it. And there's a lot of other pressing needs between now and then to worry about. So I suspect that will have an economic impact at some point as well. So then, what support's being given? We've all seen a lot of this in the press. We've all read the news more than we've ever done before. But these are the main financial support packages being given now for SMEs. There are some for bigger businesses, but I won't talk about those. But I'll go through them all one by one, relatively high level, because we probably know some of these already. But there's constant changes to these. So if you knew the rules 2 months ago, they'll be different now. So bear that in mind. Furlough is the word of 2020. I'd never heard it before. Quick Google search shows that it's one of the most searched definitions because nobody knew the word. We just don't use it in everyday language. And this is what it means. Effectively, leave of absence. So, yeah, they've chosen the right word because that's what's happening for the coronavirus job retention scheme. People have been asked to temporarily stop working and they're being compensated by being paid 80% of their salary. And the companies are claiming that back from the government. I've just said they're being paid 80% of their salary. That's what an employer can claim. However, the employer can pay the employee more than that if they so desire. And that would change from business to business depending on all sorts of factors, such as their economic strength, how they want to look after their teams, how important, it is to plug those gaps that the employees are going to face, because there's a cap at 30,000. So it's been a very well taken up scheme. I'll get into the numbers in a bit, but the one area where people have been left out is directors who pay themselves a small nominal salary and then pay the rest as dividends. It's only what goes for your PAYE that can be claimed back as a scheme. So some people have been left in a bit of a gap. There's all sorts of reasons why that is. Arguably, the government have been trying to stop people from doing that for tax planning for a while. But also, it's very difficult for people to sense check the claims because it's done by the income tax return as opposed to accounts or the RTI system for PAYE. So there's real practical reasons why they can't do it. There's probably political ones as well, but there's a real big number of people who aren't protected by this scheme. These rules got updated on Friday night. I'm not quite sure why the Chancellor does his updates on a Friday night after the end of the working week, but it seemed to be the case. So very, very recently, the rules have changed. You're probably all familiar with the ones before. Importantly, of the changes, I haven't put it on the slide, but so I say new employees, new claims for employees to go on furlough closes from the 30th of June, and you have to have a 3-week period before you can claim for them. So effectively, if you've got employees that are employed at the moment that were in work at the 19th of March, and you want to put them on furlough, you've got to do it by the 10th of June, otherwise they'll be timed out and you won't be able to get their support. So bear in mind that's a hot off the press new change from Friday. So you need to make sure that's planned for. One of the questions I get asked very regularly from clients is, can my team do some part-time work and we just claim support for the balance of the work they don't get paid? As of now, the answer to that is no, you can't do it. But from July, part-time work will be available where they can get paid 100% for what they do, and then the company can claim back 80% for the times they're not working. From August, you have to start paying the NI, and from September, there's increased costs for employers. This slide from the Chancellor, he's actually started branding his own slides. Perhaps he's looking to make a brand of himself and maybe go up the ladder even further than he is at the moment. And I think his reputation is probably such that he's going to try and make hay whilst they can. But this slide shows the changes from August, September, and the end point in October. He said it's not going to go on beyond October, which will be 8 months of support because it's costly. 15.5 billion to date. It's only going to go up that number, obviously, although the claims per month are coming down. But at one point, I think a third of all private sector employees were paid for by the government. So that support is massive. And it is a grant. It doesn't have to be paid back, but it will be part of your taxable income going forward. The second biggest announcement probably of support was the Coronavirus Business Interruption Loan Scheme, which is basically a government scheme to back loans to businesses by providing security. It's mainly used for loans above 50,000 and up to 5 million. There is a different scheme for loans above that for bigger businesses, and for below 50,000, the bounce back scheme is generally used. But importantly, there's no personal guarantees for loans below 250,000, and above 250,000, banks can ask for personal guarantees but can't include the family home as part of the security for that. No interest or fees for the first 12 months. That will be paid for by the government, and it's a 6-year loan term that can be used on overdrafts and asset finance. In practice, the banks have been asked to use their normal decision criteria, but there has to be for a business that's been impacted by coronavirus and was a viable business before coronavirus. So if you were, on the edge of a cliff and not looking like you survived before this hit, the loan scheme will not be used to save you. It's quite a light application process. So they're not recommending cash flow forecasts, etc. They're not mandatory to apply, but I'd recommend you did do it, because otherwise, how do you know what's the right amount of money to borrow? There was a lot of bad press to start with. A lot of applications got rejected, but their banks were told to use their normal criteria. That's been fine-tuned to a criteria fit for purpose for now. A lot more applications are being approved. But you can see there, 35,000 of 71,000 have only been approved. What I don't know from that stat is if they're still ongoing applications or whether they're rejected. But £6 billion so far. And the government's providing security up to £330 billion. That includes the bounce back loans and the bigger schemes, but obviously there's a big gap between there. I wanted to write that number out. It's the highest number I've ever written in my life. There's an awful lot of zeros there. And of course, that won't be the cost to the government, because that's the security. And a lot of these loans, hopefully most of these loans, will get paid back. But not all will, obviously. So there is a cost. The bounce back loans are the small version of these. It's mainly an online application from what I've seen practically from my clients applying for them. There's a very simple calculator based on turnover to determine what loan you get. It's completely backed by the government, no PGs, and no interest in the first 12 months. I've seen these applied for and paid out within 24 hours, so very fast and effective. They were extremely popular on the first day they were announced, and as of the start of this week, 8.3 billion has been paid out in loans. And you can see there from the approval rate, a lot higher success rate in getting the loans. There's been grant funds available for small businesses, and these are really small businesses, and it's administered by the local councils. £10,000, but you have to qualify for small business rate relief to get it. I haven't done much advice around this because it's been direct applications to the council rather than a tax type of regime. There's slightly different rules for the hospitality industry, cafes, etc. Where it's a bigger grant and up to a different rateable value. I actually have a cafe as a client in the centre of Birmingham, and whilst it's a very small business, their rent is so high because it's central Birmingham, they don't qualify for this. But I saw the Chamber release some on their newsletter yesterday an announcement that the council are looking at discretionary loans for businesses that didn't get covered under these rules. So my client is now applying for one of those. So thank you for the Chamber for making us aware of that. But as you can see from here, very small businesses will be eligible for a grant. And again, a grant is effectively free money rather than a loan, which is obviously quite a different factor. And then this is effectively the furlough scheme for self-employed. Now, self-employed are sole traders and partnerships. It doesn't include these companies that have directors paid through dividends. My clients that are affected by that have been contacting me when they've seen the information released about this scheme, but they're not covered. It's those that are actually taxed through their income tax as opposed to corporation tax. Again, you have to prove that, or say that you've been in fact impacted by coronavirus, and you have to be trading since 1819 and intend to carry on trading. It's restricted if you have profits averaging more than 50,000, and also if your other income is higher than your self-employed income, then your claim will be dismissed. So I've had some people where they've got a small sole trader business, maybe a hobby business. One of my clients makes wedding dresses, but she has dividends from another company which exceed the income she gets from this business. This business, the wedding dress business, as you can imagine, stalled because nobody's getting married, unfortunately. But she can't get the claim for this. It's been an online claim process, quite slick actually, I'd say. I haven't had too many clients come to us for advice on this because HMRC have literally just emailed the taxpayer, and then an online portal effectively goes through the application process. And as you can see, very quickly, this only got launched mid-May, I think. £6.8 billion have been paid out. As with the furlough scheme, on Friday, the Chancellor, with another self-branded slide, extended this for another 3 months. As you see, I just took this straight off Twitter. The grant's going to be smaller this time. Instead of a maximum of 7,500, it's 6,570. And again, he said, this is where it ends. No more support after this. You're on your own. The VAT Deferral support, people have already pretty much forgotten about this as support because it was very, very quickly announced. And it was a kind of instant cash flow advantage. If you had VAT to pay between 20th of March and 20th of June, you could defer it up to the 31st of March 2021. Instant cash flow benefit for a lot of businesses, that. But that period is pretty much timed out now. So May quarters, which is obviously end of last week, will be the first VAT quarter where you got to pay your VAT. That will be due for most people by about the 7th of July. So you've got to factor that into your cash flow now going forward, that you're going to start paying your VAT over. Probably a lot smaller payments than usual because I'm guessing most businesses' income is lower, but something to bear in mind. And don't forget, you've got this VAT deferral for that quarter that's got to be paid at some point by the 31st of March. So when you're looking at things like the C-bills and bounce back loans, I'll get onto this when I talk about financial planning, don't forget these sorts of things that you've taken advantage of now, you've got to pay. I know some clients will just forget about it, but these are still to be paid. And again, this is probably under the radar of a lot of people. If you pay your tax on account, which is basically income tax paid the 31st of July, you can defer it to the 31st of January. So for a lot of people, that would be the tax payable for the year up to 31st of March 2020. So their income would have probably been at normal levels and they haven't yet paid their tax. But of course, they might be eating into their reserves to live if they're not working or not trading now. So it gives you some cash flow advantage of deferring it, but the tax is still payable. If your income drops in the 2021 year, you can reduce the payments on account for the next year to give you some cash flow, but that tax that you earned on earnings up to 31st of March 20 is still payable. You're just delaying when it can be paid. So lots of supports available, and they're still ongoing available, especially in terms of the loans. But we've got to plan ahead now. We've got to make maximum use of the support you can get, but plan ahead for reopening as lockdown is lifted. But what is the new normal? I borrowed this slide from lowtoucheconomy.com, and I thought it was really good because it shows the different things that we've got to factor in over time. Social distancing, hygiene, travel restrictions, what happens if a vaccine comes along, what happens if it doesn't, what happens if the virus wanes, it's not getting as strong. We've heard from Italy in the last couple of days. Hopefully that's the trend that continues. But what is the new normal? What's the environment going to be working in? At no point are we going to be able to flick a switch and say business as normal. It's going to be a gradual uneasing with the odd peak potentially that we have to flow through again. And it's going to change per sector and per business and size, strength, etc. So how do we plan for the unknown? Well, getting as much information as possible at all sources is obviously the best bit of advice, but also breaking it down into its constituent parts. So I think you need to have commercial operating planning, i.e. when can we open, what will business look and feel like, then the operational things about social distancing, health and safety, etc. And then the financial planning, what the business look and feel like from a numbers point of view. And you kind of have to do that after the commercial and operational review, but then close that circle and revisit it if your plans aren't affordable or we can't get the finance, etc. And then once we're ready to go, we have to think about our reputation as businesses. Are we doing things too quick, too soon, well enough, safe enough, etc. I saw this news article in April and it amazed me because you forget businesses out there. Primark sells nothing because retailers struggle. Primark famously don't have an online presence. You have to go into their stores to buy stuff. And they were very successful by zagging when everybody else was zigging until this hit. And they've got no no online sales stream. So they were hit massively. And the same applies to small cafes, etc. You've seen people adapt. Obviously, local bakeries open up online for deliveries. So we've been buying crispy bread and cakes and stuff for treats, supporting local businesses as a family. And they've had to do that very, very quickly and change. So what you need to do as a business is work out how severely you've been impacted by coronavirus. Some businesses have been positively impacted, so they are going to make hay. You'll see surge pricing on things in short supply, PPE, etc., face masks, hand sanitizers, and then they're going to make as much of the demand as they possibly can, and those businesses that were affected significantly are going to have to do completely the opposite. They're going to have to shut down operations, mothball things, and get prepared for a restart. And then you have to split this level of severity in how your business is impacted over the timescale. So, the next 3 months, 3 months after that, etc., and into next year for recovery. It's just not one plan. It's got to be a gradual plan to look at the different impacts of the environment that you're in. So obviously it's going to vary on sector. Restaurants, gyms, etc., not opening up fully at the moment. Theatres can't, sporting venues, etc. But offices, factories can open up. So you've got to think about when you can do it and should you do it, because customers might adapt, supply chain, your workforce. So how do you get that support? The Chamber have got lots of information, which has been great. I've been reading it regularly. But all the trade-specific organisations are probably not a bad thing, because you'll know from those what other people are doing, what's best practice, and you can share ideas to work together. You're going to have to rely on IT more than ever, but also you've got to prepare for reduced demand. We're going into recession. How will that impact on your business? Also, what's happened whilst you've been closed, if you have been closed, or certainly not open in the normal ways? Have you managed to maintain those customer relationships? Are they still going to be there, or have they gone elsewhere to somebody that can provide them what they need whilst you've been closed or not operating at full capacity? How do you resurrect those? How do you get them back? And then what is your point of sale now? Is it online? Is it in store? Who knows? It's going to impact every business differently. But these are things you've got to get your head around and make an actual plan for now before you can open up fully and get back to the future. And it's essential to make those changes. Those businesses who failed in the last recession, the ones that didn't change enough and in the right direction, this will be no different. You've got to make the right decisions, and just look around and see what's best practice, and innovate as much as you can yourself. But effectively, standing still and expecting things will just become better just won't work. Unfortunately, signs, plastic screens on tables, in between desks, high-level cleaning operations are going to be required before you can open up. Some of it might be for show to give people confidence, but that's valid. And obviously a lot of it will be generally for people's health and safety. We need to consider risk assessments for all areas of the business. But don't forget, this costs money in more ways than one. It may reduce your capacity. You may not be able to get as many people in a cafe or a bar, or have as many meetings as possible if you're in office, because you have to have a cleaning process after a boardroom's been used, etc. There's cost to the PPE, as I said before. I know somebody as an electrician's bought so many face masks and it cost him so much money. He's taken his tools out of his metal lock box in his van and put the face masks in there because they're more valuable than the tools now. It's a strange old world, but this is what's happening with surge pricing. And you've got to plan this into any forecast and planning financially you do, because it's costing more than you expect and taking longer. Same as the old toilet roll syndrome at the supermarkets when this all started. It's the same for PPE. There's definitely surge pricing. People are profiteering off the back of this, but you can't operate without it. So you're going to have to plan your timing of when you open up and how you go about doing it. And rest assured, there will be the keyboard warriors out there that will name and shame those businesses they don't feel safe in. And you don't be one of those ones doing that. So I think you should have a word with the business and say you're not comfortable, and let them know, so they at least they understand the fears and can do something about it. But also you want your business to be secure for the people it engages with. And the plans you've got to make, you've got to be resilient, because this could happen again. Second spike people keep talking about. Hopefully that won't happen. But what happens if in 10 years, if there's another pandemic. We need to remember the lessons learned. I'll go back to my disaster recovery plan. We need to plan for these on a more regular basis. So now you've done your commercial and operational planning, hopefully you've got an idea of what you think business will look and feel like in terms of volume, activity, sales, purchase prices, etc., margins. The cost for getting business open again and maintaining it, cleaning costs are going to be higher, those sorts of routines, etc. And then you can now do your financial planning. And this financial planning is what will tell you how much money you need to operate. As I said before, banks aren't necessarily asking for financial plans for loans, but I think you need to do this work first, do your planning, and then you know how much money you need to borrow. That's massively important because it's always harder to go back to a bank and ask for more once they've already lent you a lot. Because it just shows you're not in control of your numbers. In good times, I can honestly tell you the businesses that plan regularly, have forecast budgets, etc., cash flow forecasts in particular, are the ones that make the most money. There's a real correlation there because they're really looking and challenging their own businesses of what's the best way to work. And if you don't do it when times are good, you haven't got the strength for when times are poor. And if you don't do it when times are poor, good luck, you may not survive this. You've really got to get on top of your financial planning. Obviously, take advice from the accountant and also your bank. What gives the bank comfort? Often banks get more comfort when the accountant's involved because obviously an extra professional pair of eyes looking and challenging those forecasts, those operations, supporting the business is massively important and gives people a lot of comfort. But the one thing that I think is really important to get across is that the cash flow drain will be harder now going forward, because for those businesses that sell on credit, the money that you've been collecting the last 2 or 3 months has been from when you had full operations up until the end of, say, end of March. If you've been closed or reduced operations in April and May and going into June, that money will dry up. You know, the average debtor days is probably 60 in the UK. So the money you banked by those sales historically is gone. So when you're opening up, cash flow will be slower. People will probably take you longer to pay as well. But you've got to start paying your wages. You've got to start paying your suppliers to get stock in, etc. And, you know, the old cliched saying was more businesses went bankrupt coming out of recession than going in. Applies here. Cash flow now is going to be harder as you start ramping up operations to normal. And some of the benefits you've taken, such as the VAT deferral, etc., paying back loans, got to be factored into the cash flow as well. So there's going to be cash outflow issues. As I've already covered, this cost of health and safety and investments of reopening is more expensive than you think. We've spent over £3,000 on signs, another £3,000 on hand sanitisers. And we're still not open yet. You know, we were planning on mid-June to open the office safely. We want to do it right. We're all working from home as an office, so it doesn't impact us too much. But, you know, these costs are going to be quite prohibitive for very small businesses. You've got to plan for these things. And banks have been asking for best case, worst case, and expected scenarios in some forecasts, even though they're not, you know, mandatory. But I think that's the best way to approach it. What's your best case scenario? What's your expected case scenario, and what's your worst case scenario? And then you can reflect on those numbers, what they give you on your strategy, especially your operational strategy in terms of, do we need to have all branches open? Do we need to mothball certain parts of the businesses? What we're going to do about staff costs, especially as we've come out of the furlough scheme at the end of October. Do we need all those people? That's the harder thought process that people are going to have to think about. But it's essential to keep the rest of the business going and protect the majority. And once you've got your operation and commercial operations ready to go, what does it look and feel like to people outside? We've seen the positives. You know, the people that have done really good things, protected their teams, protected the society, protected customers. I think you know most of these stories. Obviously, Nightingale, Sir Captain Tom, the tech companies coming to make ventilators. But the bottom right corner is the Admiral symbol. It's for Admiral Insurance. Insurers always have a bad rep. It's probably fair to say. But they spotted that their motor use is 40% of what it was. So they've just given every one of their customers who's got car insurance a £25 rebate. They didn't need to do that commercially, but I mean, they did, and that's doing the right thing. That was looking at for their customers and gives them good reputation. And then we've seen some horror stories at the start of the crisis where the Spoons not wanting to pay their staff until they got support from the government, just caused so much bad PR, no doubt ill favour towards them from their own team and customers. Tesla trying to force the opening of their factory, which is against California laws at the moment. Can you imagine what it must feel like to be one of their employees being forced back to work if that's what they want? It wouldn't give me a great deal of comfort. Sir Richard Branson, obviously the poster boy of British billionaires for business, now getting bad reputation because he wants some government support. And I can get the logic of it, actually, because these things are separate businesses with separate shareholders, investors, stakeholders, etc. But he's getting a lot of bad reputation. Then people breaking rules, essentially. Bottom right corner, and his eyes look okay there, don't they? Maybe a bit wild looking, but there you go. If you're breaking rules, people will call you out, as I said before, on social media, and that can get around. So watch out for your reputation. You want to do the right thing by your customers, your team, most importantly, because they become your biggest advocates, and your general society and supply chain. One point I've put there is your reputation from a credit point of view. Are you going buying credit? What happens if you default on loans? If you get county court judgments against you? That's why you're going to get ahead of the curve in terms of your finances to make sure you've covered these things off. As always, speak to your bank, speak to your accountants to get the best advice on that. But reputationally, in the next year or two, your credit score is going to be important as well. So in summary, the support available has been massive, very quickly written. There's holes in it. We all know that. But they're changing things regularly. Keep on top of it. The general gov.uk websites are actually very good, clearly written information. The Chamber, of course, are releasing things regularly. As I say, perhaps consider a trade association. But importantly, you've got to adapt, plan. I've said plan again because this is going to be an evolving situation, and there's the short, medium, long term that you've got to consider. But most importantly, good luck. Trying times, it's going to be difficult, but generally speaking, wish you the best of luck. I've whizzed through the support and the planning side of things, but I'm happy to have any questions. So throw back to Sam now and wait for any questions.
Morgan, I'm just turning everything back on. Thank you. That was great, actually. Really useful, really informative. There's a lot to take into consideration. There's a lot of planning for businesses to look at as well, and to take on board and consider. Let's have a look. If we have got any Q&A coming through, what we can do, as I said earlier on at the beginning of the webinar gets recorded and uploaded to the Greater Birmingham website. So you'll hear Morgan again, and along with Morgan's slides, all the information that was needed are there. There were some really good slides, quite like your slides. I think that's something that businesses can look at and adapt and take on. As well as all the information provided by Morgan and Prime today, we've got the Greater Birmingham website that you can all go to for any other COVID-19 support and information. And I was one of those Admiral customers, so me and my daughter, we both got a rebate on our car insurance, and that was reputation is key. I think there's been good businesses who have shone and have adapted out there to make it work for everybody else and to help everybody. Grace, if you could just put up the last slide for me, and that would be good, and then we can share with with everybody who's on board. The last some up and coming webinars that are taking place within the chamber. Go through those. Here we go. So there's a few webinars across Greater Birmingham, being hosted by our other divisions, whether it be the Asian business, our Transatlantic Sutton Coldfield, or Lichfield and Tamworth and Cannock. There's a few extra webinars taking place, and all of those for you to join and to sign up for are on the Greater Birmingham Chamber's website under the events page. So really, there is a question. Can you see that, Morgan, that question that's just come through?
Yeah, I can see the question. So have I seen businesses obtaining bounce back funding despite being in a position of difficulty? Yes, I think. I think it's a bit debatable whether there's on an upward trend from a poor position prior to coronavirus. I don't think I'd go as far as saying they've ticked the box incorrectly, but I have seen businesses that were struggling be declined funding, which I think was the right thing. I've spoken to a couple of contacts in the finance sector, and there are some horror stories where people are just allowing people to get the funding because then it's secured by the government to clear other funding, which is not what it's entitled to. I wouldn't quite say it's the Wild West, but people are probably using it liberally. But I've not seen any of those circumstances directly, Gareth.
No, that's good. And also as well, obviously Morgan's mentioned the information we can get from Prime, the information we can get from the Chamber's website, but also look in your local council's websites as well. Obviously there's the government website for COVID. We work within Solihull Chamber, we work closely with the Solihull Council, and they're at the moment conducting their own business impact survey, as well as the Chamber conducting our next quarterly business review survey, where all businesses can go online, complete the questionnaire and share their thoughts, and with that information then we pull all that information together and obviously take it to the British Chambers and to our local governments. But yeah, the council as well, Solihull Council have done quite a lot, and there's a lot more support out there and a lot more guidance and information as well that's needed. So I think if there's no more questions, it just leaves me to thank Morgan for his time this morning, putting the webinar together and presenting it to everybody. Thank you to those that have dialed in. And as we said, then the webinar will be shared on the Greater Birmingham Chamber's website, and also a link, and this will be all emailed out to those delegates that took place today as well. And thank you to Grace from our events team, who sits in the background and does all of the slides and the IT techie for us. So thank you very much, and everybody enjoy the rest of your day and the sunshine.